Florida's condo boom created an unstoppable frenzy. 330,000 newcomers, record prices soaring above $410,000, and a governor eager to claim credit for building a paradise. But in 2025, as buyers flooded out and condo contracts collapsed overnight, it wasn't just the market that cracked, it was the governor's composure. In 2021, South Florida became the finish line for America's restless millions. Families, retirees, remote workers, and investors all chasing warm weather and a promise of low taxes. The numbers told the story. Florida's population surged by more than 220,000 that year, with Palm Beach alone adding over 16,000 new residents. Miami-Dade and Broward, always magnets for international arrivals, saw steady gains from abroad, even as some longtime locals packed up for Georgia or Texas. For every U-Haul rolling in from New Jersey or Illinois, another condo went off the market. Now, with Hurricane Erin threatening to shatter what's left, hundreds of millions in home values and thousands of livelihoods are on the line. Why did Florida's hottest dream turn into a nightmare almost no one saw coming? In some neighborhoods, the total number of homes for sale dropped by half in less than 12 months. By the end of 2021, the state's population topped 22 million, a record high. For the first time in decades, South Florida's housing demand felt limitless. Behind every closed sale, a new story began. Remote workers setting up home offices with ocean views, retirees finally trading snow for sand, and investors betting that the boom would last. All of it fueled by the simple math of more people chasing fewer homes. The pressure built, and prices started to climb. Miami Beach, the average two-bedroom condo, once a $350,000 starter home, now fetched over $600,000. Bidding wars erupted before listings even hit the MLS. In Boca Raton, a penthouse that closed at $1.2 million in 2022 resold for $2 million just 18 months later. Developers paid for skywriting campaigns and sponsored influencer tours, promising buyers a slice of paradise with every closing. Investors snapped up entire floors, planning to flip units before the paint dried. In Fort Lauderdale, more than 70% of new listings sold above asking, with escalation clauses pushing final prices higher by the week. For a moment, it felt like the boom would never end. 6 insurance carriers failed in Florida between 2022 and 2025. Each exit announced with little warning, each collapse sending shockwaves through the market. United Property Insurance, once one of the largest on the coast, withdrew from South Florida in August 2025, just weeks before hurricane season's peak. Their departure left more than 30,000 policyholders scrambling for alternatives, many forced to accept bare-bones coverage or risk going uninsured entirely. By the time the dust settled, more than 600,000 homeowners statewide had lost their private coverage in less than 3 years. The dominoes fell quickly. After every carrier exit, lenders tightened their rules. Mortgage approvals stalled if buyers couldn't produce a valid policy. Condo closings froze mid-escrow, with some buyers losing deposits as high as $20,000 when deals unraveled. Each crisis year, the state's insurance regulator held emergency hearings, but the exodus continued. Carriers that stayed demanded higher deductibles, windstorm exclusions, and stricter inspection rules. For condo boards, the annual renewal became a guessing game. Would they get an offer at all? And if so, at what cost? By mid-2025, Citizens covered more than 1.3 million properties, nearly 1 in 8 homes statewide. That pool of risk grew with every carrier failure, stretching the system and raising the specter of surcharges on every policyholder if a major storm hit. The private insurance market's retreat has forced a mass migration to Citizens Property Insurance Corporation, the state-run backstop originally designed for emergencies only. By mid-2025, Citizens covered over 1.3 million homes, nearly 1 in 8 across Florida. That pool grows with every carrier exit, stretching resources and raising the risk that a single major storm could trigger surcharges for every policyholder in the state, not just those in Citizens. For buyers, the math is brutal. Premiums now swallow a larger share of the monthly payment than property taxes in many neighborhoods. Investors, once eager to snap up rental units, now demand deep discounts or walk away entirely. Condo boards, desperate to maintain property values, debate whether to allow short-term rentals or relax pet restrictions, anything to fill the empty units. The liquidity that fueled South Florida's boom has dried up, replaced by a wary standoff between buyers and sellers. In this new reality, the only certainty is that inventory keeps climbing, and every failed deal leaves another story of loss in its wake. September 2nd, 2025. The National Hurricane Center's 5 a.m. advisory flashes across every agent's phone. Erin, now a Category 4, with sustained winds cresting 130 miles an hour. The storm's cone doesn't point straight at Miami, but it's close enough to rattle nerves from South Beach to West Palm. Within an hour, inboxes fill with subject lines: contract on hold, buyer requesting extension. If you're considering a move, look closely at the numbers, not just the view. The market's verdict is in, risk is back on the table, and caution is worth its weight in equity. In 2021, over 330,000 people moved to South Florida, fueling a condo boom that pushed median prices above $410,000 by late 2024. But just months later, the market saw a 61% surge in unsold inventory and an 11% drop in pending sales, with average mortgage rates topping 7%. 6 major insurance carriers exited the state, forcing 1.3 million policies onto Citizens and driving Broward premiums above $6,200. When Hurricane Erin was upgraded on September 2, 2025, more than half of condo contracts collapsed in a single week. Internal state emails reveal the governor's office issuing hourly directives amid political standoffs with local officials. Yet many documents detailing building safety and insurance risks remain undisclosed. Today, Cape Coral faces a 20% price decline, while out-of-state buyers shift their attention elsewhere. What remains unclear is how resilient the region's housing market will be if another storm hits or insurance options shrink further. The evidence shows that Florida's condo crisis is both a warning and a challenge, one still unfolding in real time.